right. So when you guys think about footprints, a lot of you guys get freaked out by when you see the numbers on the candles. But in reality, every candle, every level that you have, the price level is made up of an auction, whether it's passive participants or active participants, meaning market makers. But usually, you're going to have a reflection, like a footprint of what happened at that level. And that's basically what the footprints show. They kind of show you the X-ray candle behind. Because when you look at the regular candle, just the Japanese candles, you only have like four components to it: the open, high, low, and close. With the footprints, you can, there's different things that you can distinguish. You can distinguish where the aggression was, where are people sitting, right, with volume or footprints, so you can see where they previously sold off from, where was that imbalance. You can notice that along with the open, and closed auctions, if they're finished or unfinished auctions, and then as well as if there's any stacked imbalances. And then if you can add the delta, right, which we calculate ask minus the bid, I think it gives you a lot of good information. And a lot of you guys started using it to the point that, you're making your own trading strategies that if they're profitable, they've been, really good to keep, and you don't want to change too much in that sense. Okay. So how does it look on tape? And if you guys remember, we looked at this a little bit, right, last time. So if you have a DOM, right, the depth of market, if you have it up, these are all passive sellers, right? And these are passive buyers. I asked you guys last time, if there was only passive sellers and passive buyers, would the stock price move?
Nope.
No.
No, because you need somebody that's willing to kind of shake it up a little bit, meaning you need a guy that's willing, or a woman trying to do market buy or market sell in order to fill in between, right? And that's kind of what we are looking for when we, especially on the footprints imbalance chart, you're trying to see where did the imbalance happen, right? Are we seeing people? And that's why when you see sometimes the bid is red in comparison, right, and the price went lower, it's safe to assume that that was an aggressive seller, because if he was asking for the lot of 75 contracts here at 100 price, but he was willing to accept 99 and he took that, that means he was a aggressive seller. He wanted to get rid of that inventory. So, and that's what kind of the footprint starts showing you at what level, how did it occur, right? That was the auction strong or not? And if you guys remember, you have on the right side, you have who on the ask side, who's involved on the right side?
Market buyers.
Aggressive buyers, yep.
Yep.
And
Passive sellers.
and passive sellers. So, if you're sitting, if the price is at 100 and you see, let's say you use level 2 or something on your trading, people even have level 3. But if you see at, let's say at 106, there's a 900 lot sitting. As you're approaching that, most people would, close their profits not to hit that guy. And sometimes it's hard to tell on this screenshot here, but sometimes you have iceberg orders sitting behind. An iceberg order is basically, and we won't go into too many details on it, but it's just a large order that's broken up into a bunch of chunks, right? Because if they have a lot of inventory, can they sell? If they put 1.1 million contracts here and people see that, people will freak out, right? And it most likely would not get filled all in that quantity. So for them, they fill in, and it's called iceberg because when you think about iceberg, only the peak you see. You don't really see what's below that. So they show you that peak, but you don't see their intention and what's the size of those orders that they have below. That's why it's called an iceberg. So when you think about it, you have the passive sellers and aggressive buyers. Then you have passive buyers sitting at the bid, and then you have the aggressive sellers when if they're eager to sell. So the tape itself is not that difficult to read. And the footprint alone, if you're to look at a daily footprint of itself, could you make a lot of decisions off of that? If I just give you one daily footprint, daily time frame, could you guys make a lot of decisions for trading off of that?
No.
Not really. You need the context, right? If you're at resistance, let's say, and then you see an ask side that's inflated, what would that mean?
Might be sellers there.
It might be a passive seller sitting at the major resistance, right? And if the price doesn't go above it, then you would know what? For sure that it was sellers, right?
Yep.
So, and that's why some people look at the footprint and they look at one order on the footprint and they're like, oh my God, I'm gonna make a swing decision based off of this. uh, Especially if you want to swing with the footprints and use it for, you have to look at the bigger picture just like you do on the candles, but you have to dissect more details to find where's your perfect entry, where are the stacked imbalances, is there any stacked POCs or HVNs that are nearby. Those are the type of things that you have to pay attention when you're trading footprints. It's really not that one candle that you're after. It's the context that's more important than the candle itself. Okay. You guys have seen this chart. It just breaks down the previous, kind of puts it together. It tells you that there's passive sellers, aggressive buyers, and split on a side. There's different views you guys can see on footprints. Some of you guys have seen me. I use the imbalances. You can also use the ask and a bid, which basically takes all of the volume, right, and puts it next to each other. I believe Ninja default is the ask and the bid and ask, right, where they have 1,000 contracts here and 56 contracts here. So it tells you at that level, this is how the split was at that level alone. Okay. When you're using imbalance, you're looking for the imbalance between, and you have to use diagonal level. It's not really horizontal reading, but rather you're reading diagonally between each other, and that's typically what I do on Quantower. If you see a 0 on, let's say in this case, at the bid at the top, how would you guys describe what happens there?
A finished auction.
Yeah, but what happened at the top?
They ran out of buyers.
Or the last buyer bought and now they're selling and nobody's interested in it, right? Somebody won at the top, right? And when you're bidding in an auction, why do you go higher in an auction?
To shut off buyers.
To shut off the buyers. And basically when you come there and there's no more bids, that means, hey, we gave you everything you got. Here you go. The ask is filled. They bought this at this level and there's no more interest higher. And then of course, if you have a 0 on the bottom, on the ask side here, it would be the same, right? So if you see that, I would say, when you use market profile, right, we know the TPOs, the single prints, indicate a completed auction, and 2 or more. In footprints, you can use the zeros at the top. If both of these have a number, right, if there was a number here and a number here, that means it's on completed auction. Most likely it's going to be used as a magnet, kind of refill. Okay. Is anyone confused about bid and ask? Bid is what you're willing to pay, and ask is what you want for whatever you're selling. Does everybody click on this slide? I would say then yes, you guys do. So if you look at this chart, right, it's identical chart. One is candlesticks and the other one is footprints. When you look at this chart, how would you know where you want to buy here? On the left side, how would you know if you're just looking at candlesticks, no other indicators or anything, right? How would you know where to buy?
With no other indicator, it'd be kind of hard.
It would be very difficult because a lot of people say price action pays, right? Or price pays. Well, if price pays, how would you determine where is the buy level? So on this chart, how would you know that the buy level is right here? Would anyone have an idea? If you're just to look at this left side, you would not have an idea that the buy level is here. There's no way. It would be impossible. But when you look at, on the footprint chart, they give you clues and they leave footprints. They leave stuff behind that you can make a decision out of in addition to the context of the chart, right? Especially if you use the bottom sections, which we will get into, the time statistics, right? The delta, the max, the min. But here, and I'll go into it here, we can tell where was the highest volume. Was there any aggression? Aggression means imbalances. Imbalance on the footprint chart means that there was either 3-to-1, 300%, 600%, or 900% increase in the aggression, right? Whether it was a buyer or seller's, important to see the price action. In this case, on the right here, you guys see the green line here? So for the new people, that would be an example of a stacked imbalance. That means there was 3 set of stacked imbalances together, and it highlights it as a zone. And typically, those zones you want to play. In this case, this was, I believe, a daily chart. You want to pay attention to, to go long. If you come back to a balance, typically they like to dip below, but most of the time on a daily, they will act as a magnet. And once they come to that level, they will have a pretty decent bounce from that. And that's exactly what you're seeing here. Identical chart. One has just open, high, low, close, and one has a little bit more data. And then for each candle, you have a POC, right? You see here, for instance, this is a P-shaped POC. And look, they went above, they, auctioned much higher, market went up. Then they came back and they retested that level, and that's where they stopped. So that's the, just that if you're to compare the two charts, side by side, that's what it would look like. Delta. So most of you probably are familiar with delta from options, right? This has nothing to do with it, right? The delta here is basically your ask minus the bid. Because if you're buying at ask, what is that? What does that make you?
Aggressive buyer.
Aggressive buyer.
Definitely aggressive buyer. Because if somebody's like, I want I want 150 for this, and you're like, oh, here goes 150 without negotiating, that makes you an aggressive buyer. So you're a positive one. And when you have positive delta and you're going up, that makes sense, right? The price is going up and people are aggressive buying, therefore the delta is green. If you're going up and the delta is red, that's something that should spark your interest. That's called divergence. Something's not adding up in that case. Can you guys visualize that so far? We'll find.
Yeah, I
but
remember like this Friday, it's like that.
there was some Friday, I think Drew and I both were aware of one. And then there's a few other ones this week that had the delta divergence, whether it was up or down, but they usually show up, right? And it's almost like, when you think about those other indicators that you have delta divergence RSI divergence. If RSI is making lower highs and the price is making higher highs, that's called a divergence, right? There's divergence.
Yep.
In this case, and the delta, it's same. If it's green delta, but you're going down, you're reaching a point where the buyers are gonna come in and drive their price higher. And the lower time frame you use, right, the more risk you carry. If you're using 1 minute to make entries or make your bias, then it's gonna be a little bit more difficult, right? Because you're not grabbing a lot of data. I would say minimal that you guys want to be on at most times is 5 minutes. Ideally, you want to be on 15 minutes and 30 minutes. 30 minutes, you should find the zones and use 5 minutes, or if you want 10 minutes, whatever, just not below 5 minutes. 5 minutes minimum. Use that for entries on footprints. So 30, find the zones. 5, use for entries. Okay. Anomalies here, that's what I kind of break down. Green candle with negative delta shows divergence to downside, and red candle with positive delta shows divergence to the upside. So they're not always straightforward. Okay. Just because you see that type of divergence between a green and a delta, it doesn't necessarily mean that's the only one. There's also something called absorption, and you guys have heard me say it, a lot of people in this room or Discord say, oh, it seems like there's a little bit of an absorption happening. Who can explain absorption using this slide here? Using terminology from this slide.
Yeah, it's where passive buyers or sellers step in and absorb the aggressive sellers and hold them at a price.
That's correct. So whether it's passive sellers or passive buyers, they're absorbing those aggressive sellers or buyers. So in case of a, let's say, absorption at the top is where you have a guy selling massively here. Let's say, let's see. So if this was a level right here, if this was a level here, and this guy has, let's say, a block of 500 contracts. And this guy is bidding, right? We're bidding aggressively here. We're going higher and higher. But once you get to this 500, this guy has a limit sell here. These are, limit sells on the L2 tape. He has 500 contracts to get rid of. So all these guys that are trying to buy aggressively, they keep hitting here and they take what away?
Liquidity.
So the aggressive, they're going to take the liquidity away from the ask. Does that make sense? And if they can't get over this level, that means that this level here basically absorbed all those aggressive buyers that pushed the price up. And then the same is true on the bottom, right? If the price is making lower lows and we are selling, and then let's say this guy had 1,000 contracts to buy here, right? And as they come here, they're aggressive selling, and this guy just keeps buying, and the price doesn't go lower. Well, what typically happens in the stock market is there's something called the dual tape, right? Especially if you reach this level during the RTH session. As they try to short here, what do the long boys do with their shorts when it comes to something like this?
Buy it, absorb it.
They close their
Or
shorts
cover.
Cover.
for cover, and then what you see is they notice that there's an absorption happening. They close their shorts, and people pile in. Most retail, because they didn't want to short here, they short here, and then what you get is you get a spike up because of the people shorting the dual tape, right? And then they close their shorts, they lift their offer higher, and now they don't want to sell to you. Let's say at this level right here, they don't want to sell to you here. Let's say $5. They want to sell to you at 10, so that offer goes higher. Does that make sense? Does everybody understand absorption now using this chart? Is there anyone that's confused? That's okay if you are. I don't mind giving you another example. Everybody.
I'll take another example just in case.
So now
Seem-
think about it this way. If you're in a market and you're a seller, right? Let's say you don't sell perishable items. Let's say you sell I don't want anything that goes away. Let's say you sell iPhones, right? Let's say here you sell iPhones and you have your supply is pretty heavy, and you have, I would say, let's say you have top 100 iPhones here, right? And this is a price of $1,000. You bought these iPhones, let's say, at $25. So you have steep profits here, and you still have some left. So as the price goes here, right, as the price is approaching, and typical quantities, let's say 5, just to make this relevant. As the price is going up, it's in your interest to do what as a seller? To maximize your profits by selling at the highest price possible. Okay, so let's say you come here and the demand for your iPhone, right, and you have 100 quantity here at 1,000 price, and they kind of start chipping away. They're like, okay, well, I'll buy one. I'll just draw a line, one, and they keep buying, and you have 25 left, and then somebody comes in and buys a 25 lot at 100. If this price and this quantity is absorbed, what's most likely to happen to the price of iPhone next?
Go up.
Go up. I gave you an opposite example. It's going to go up. Why? And what is price searching now?
Lost a buyer.
shut off buyers at higher levels.
It wants to go find the next set of buyers. So most likely, well, again, it will reach another level. Let's say it reaches this level, and there's an order with 2,000 iPhones, and now the price is 1,200. Well, when we come there and they're monitoring this, right? And let's say they start chipping and the smaller quantities are coming in, one, still a lot of quantity where you're demanding, right, $1,200 for each phone, but there nobody's really aggressive, or it's not even close to taking this inventory out. If they can't take this inventory out with these aggressive buyers, that means you got absorbed, meaning all the buyers were able to fit into the size what the sellers were giving. And same is true for the opposite, right? If something dips so low to the value on the bottom, somebody might have a lot of buy orders, right? And typically, what I always preach is that when you're at an attractive level for an equity, right, whether it's Pfizer or anything else that I bought recently, what do you notice about the news at the bottom? Are they good news or bad news?
Bad news mostly.
They're always bad news at the bottom, and they're always good news at the top. Right? So they try to mess with your feelings, right, on the bottom. But if you're able to see that there's large orders, let's say sitting on the top, on the bottom using footprints, even during the day on ES or NQ, when you see on a bid we saw an inflated bid, if this is our ask right here, and man, something is off. The other day when we were trading live, there was the chart that I sent, and we were at the top, and the ask was like this, and the bid was like that. And I said, something doesn't look right, right? We are reaching the top, the high of the day, the PDL of the next day. And this is this is the footprint that they give us, is you have this massive, let's say 1,000 contracts at the ask, and let's say 50 at the bid. What does that indicate if we're at the PDL?
Could be limit sellers selling at previous day low.
Most likely it's premium, PDL being defended. So if you're, let's say you're a short, you want to take a short, and you're aware of this level, well, what you could do is find this level where it happened, and then when you would look for aggression below that to get in a short, and of course you would find previous candles to find your profits, but your entry would be below where this happened. Okay. So let me erase this. So does that help with absorption? Is there anyone that doesn't understand absorption by now? Most of you should click by now. And if you don't, that's okay. You can message me if you're not comfortable, and I can explain it.
I think I understand it on a conceptual level, but then when it comes to like real-time absorption, because it takes like many candles, if I use a 5-minute footprint, like I just couldn't really,
well,
identify it as an absorption. Yeah.
Let me ask you this. You drive to work every day or anywhere you drive?
Yeah.
Okay. If I was to put you in Formula One tomorrow, how would you do?
Freak out.
You would most likely freak out, and most likely there would be a high chance we would have a funeral for you shortly after.
Most likely, yeah.
It's the practice of learning something and then applying it, right? And a footprint chart, I would say, is more of a memory or pattern recognition than anything else that I do. Because when you use volume profile, it's subjective where I draw the FVP from. I usually draw it from swing low to swing high, and I look for HVNs, and I want to identify where the LVNs are. But when you look at footprints, you're really trying to, almost like you're reading a book, but you can't read. It's building up to every paragraph that you're reading, right? If there's an absorption happening at the top, was that level important? What did we do before? How do we react? What are the numbers at the top of the auction? Those are the type of things. And then, what we're going to cover is the delta comes into play, right? And we'll go live here on charts, just to kind of look at it. But the delta is simply ask minus bid. I think we explained the green and the red. Anomalies you guys should understand, and I'll give you guys an example of an absorption, right, live, which is the bottom piece, right? Just because the delta right now is red, let's say at the top, -500, but the min delta is, let's say, I would say if the max delta was 500 and we close a negative 200 at the top, is that bullish or bearish?
Should be bearish.
If your highest delta at one point was 700 and now you're a negative 200, that's a pretty big swing. If you put it on, if you put it on a scale, let's say if you draw it like this, sometimes this panel wants to work, sometimes, let's say you put it here, right? And if this is, let's say this is positive, this is negative 200, and this is, what do we say, 700? So the difference between them is pretty big, right? So if at one point at the top you're at 700 delta, that was pretty good. Your aggressive buyers are showing up, but you close the candle all the way up here. Well, you didn't make a 700 move, you made a negative 900 move. Does that make sense? Because if the zero was right here somewhere, that means you took 700 of these aggressive buyers and you did what with them?
You even sell 200 more.
You absorbed these aggressive buyers and basically now you're selling them aggressively, and then you went and you sold aggressive 200 more. So that's when you can spot absorptions using the, the delta, the max, and the min. And these are only the 4 that I use. I added cumulative delta, right? But that's usually good for, when the switch happens, meaning if throughout the day you're green, right? Let's say the cumulative delta is green for the day here, green, 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 and then a big candle happens on the top and the cumulative delta goes to minus. You should pay attention to that candle, because what? If this candle here, if all leading to this candle, we had green delta, let's say 2000 on ES, and now this candle alone switches the cumulative delta here to, let's say, negative 200, well, that's a pretty big candle, right? All of these buyers that brought the price to that level, now it's switched and these people are selling aggressively. They absorbed it. They're selling all the inventory they can. So most likely you're looking now for a price, if you want to play, if you're in a healthy uptrend, where are you going to bounce? But you will spot this and be aware of it, right? It might not mean that you're going to get a bounce today, but you're watching this and then you're watching each candle that prints. How's the footprint? Is there any absorption happening on these individual candles? And if you see, for instance, candles starting to overlap and the delta's spiking up a little bit, right? Well, that would be a good sign that there's a little bit of absorption and that we found buyers, right? We going down to shut off the selling. So if the buyers are stepping in, well, maybe some short covering happens and you're looking, to find what's a good entry so you can take it long. I think Friday happened as well. Okay. Any questions so far? Is anyone confused on delta?
So for delta, is it how do we read it? Is it on a vertical level or it's a diagonal?
Well, it depends what you, well, if you're looking on the candles, right? I was more focused on the bottom section of my chart, where on the bottom, how, I don't know if you know, it has like a little table, and then it would have the volume, and it would have delta, then it would have the max, the min, and cumulative.
Yeah.
So that's the bottom. This is the bottom screen that I'm explaining. Then on the candles, sometimes you guys see me have like a step profile, and it would tell me at that level what is the delta. So when I switch to candles, it's telling me at price of, let's say, 50 here, the delta is green, let's say 500, right? Well, if the price goes up and comes back to this here, what would you expect to do?
It will bounce. Maybe it will peak below, but then it should bounce.
They can pick bounce, but you're looking for a bounce, especially on intradays when you have these aggressive buyers come in. I typically like to use 15 or 30 minutes when I'm using step profile on the deltas, and I'll show you guys that as well. Okay. Min max, so there's just more examples. So if you think about it, max delta, it's what's the highest delta it's been. If the delta in this example I gave is 1500 plus, and the candle closes at green at the top at 25, this is bearish, because all those buyers, aggressive buyers, got absorbed, right? So that's another way to notice the absorption at the top, right? And then true is the opposite as well. Any questions on min and max, how you can use it to distinguish absorption? Is there anyone not following so far? Okay, that's really good. Okay, high volume area. So this is, I would say this area kind of reflects also on volume profile. High volume area is just going to be a high volume area. There's a lot of contracts traded. That's what volume profile measures, is volume at price. And when you have a candle that has a lot of volume in a particular area, it's just going to be a HVN of that candle itself. It's important to know where you have POCs on candles. Okay, if you have, let's say, 30 minutes, and then you have 2 30-minute POCs that are lined up perfectly, and from that level, we bounced higher, right? We made higher highs, and we had an imbalance move. Typically, you'll hear Drew, his eyes spark up. He starts giggling because he knows it's coming to that level, and he's looking for a buy. And same is true for a short. If you have like a double HVN, and we have a strong imbalance to a downside, and then the buyers drive up the price to that same level, it's a very good short opportunity based on those POCs, or some people call HVNs, that are stacked. Can you guys visualize that? We'll find them here in a couple of minutes, but I just want to give you guys, and then I'll cover each one what I see. Okay. Let's see, imbalances. So imbalances are basically where your aggressive buyers or sellers are showing up on that candle. Typically, if you have, I would say, a D-shaped profile, are you going to have a lot of imbalances?
No.
You should
Probably
not have
just
a
at
lot
the
of
top and
imbalances.
bottom, right?
Mainly on the top and the bottom, and usually that would mean that it's the single prints, single prints on the top and the bottom, right? We know it's access highs and access lows, right? When you see a 3-to-1 or 6-to-1 or 9-to-1 imbalance, that means 3-to-1 means that there was a ratio of sellers to buyers on aggression, not necessarily quantity of buyers or sellers, because they have to match, but how the transaction was completed. When you guys think about, this chart here, did the seller have to give up their position and sell lower, or did the buyer have to give up their position and buy higher? That's exactly what the stacked imbalance means. If you have 3 levels, or on a footprint charts, it's measured in ticks, right? If you have 3 levels in a row that have an imbalance, let's say a bearish imbalance, right? And the bid side would be then highlighted on most trading software platforms. They would be highlighted, and then you can choose to highlight the stacked imbalance, whether it's 3 or 2 or 1. And if you miss, let's say, I don't typically trade breakouts, but let's say we have an imbalance and we popped higher from it. Typically, I wait for the price to come back to that imbalance, and then I'm looking for long. Do I solely go long just based on X-ray and the footprints? No. I use that in a correspondence with volume profile and see, was there ever like HVN in a short memory of the market? Let's say the past week, was there a shelf that was sitting there? If there was a shelf, and now from that point we bounced higher, I'm definitely looking for a long to play that. And if you use fibs, you can use that as a confluence item. You can use that as a confluence item to take that trade and go long. What you don't want to do is when, let's say you're playing 10-minute imbalances and you see imbalance being built, you don't want to fight the imbalances, right? Because remember, me, you, and everybody in this room, we don't have the magnitude to create an imbalance, nor do you have the magnitude on your accounts to fight the imbalance. You want to go with the flow, not against these imbalances, okay? So you do not want to counter trade the imbalance. If you see a counter, like an imbalance to the upside being created, which would be highlighted in the ask side. One second, guys. If you see an imbalance being created to the upside, then you want to play the retest of that to the bullish side. You don't want to be stuck trading there, right there and then as it's being created, because I promise you, you're going to see a lot of volatility and most of your stop losses are going to get hit. Okay. If you're seeing an imbalance, you do want to see volume pick up, right? The same principle of time, price, and volume. You want to see volume pick up as you're seeing these, and typically they do, right? Because in an imbalance, they're trying to get as much as they can if they're going to the upside, or sell as much as they can if it's downside. So you want to see a spike in volume, meaning that imbalance itself on the third point here. Where am I? Right here. You want to see the spike in volume. And then the last piece, if you see a spike, but the delta is going down, something's not adding up, right? So the fourth point here, if you see this, if you see the imbalance and we're going up, but the delta on the bottom is negative, even though they're pushing higher, they're not really that aggressive. Somebody's absorbing and selling aggressively to them. As they're going up, there's another force that's pushing back down, and you want to be aware of that, right? So all these kind of rules have to be applied when you're trading imbalances. If we fail to hold the imbalance, for instance, let's say we had an imbalance, we're going up, and it leaves the imbalance here, and then when it comes back, let's say it fails to hold that imbalance, what would that mean to you guys in terms of price action and buyers and sellers? So this was initially buying imbalance, and now we come back and we slice through it.
Buyers got absorbed.
All those buyers got absorbed. That means these buyers were fairly weak, and their stop losses are most likely going to be triggered, and then they're just going to continue because they're going to cover. That would signify that you do not want to fight that trend too much on the bullish side, that there's a high chance that you're going to go lower. And I love 30-minute imbalances. I don't know if you guys know, but if I can find 30-minute imbalances, and I think maybe this week or last week, I don't know, time just flies. We had a couple of imbalances on NQ, and they just kept playing every single imbalance to the downside, to the upside. They would come in, reject, and give us 10, 15 points. And then they would come here, give us 15 points. So if you can find a day that leaves a lot of those behind, it's not a bad idea to kind of look at that in the correspondence with whether there's any key levels in the area, PDH, PDL, or any POCs from volume. It's not a bad idea to play it.
Yeah, that was last week, Shorty. Just kept
Was it?
playing the same level.
Yeah, and it kept hitting and hitting. And I mean,
Oh
if
man,
you can get 2-3 of those, 10, 15 points, I mean, your day should be over.
that's
A lot of
great.
you
Man.
guys don't suffer from making money. A lot of you guys suffer from keeping the money. You guys make a decent amount of money, but then you turn around, let me take one more trade, and you keep the same size, and then you get punished by the market because you're being greedy, right? Typically what I do, and you guys probably noticed that by now, if I have a good start, if I make decent amount of money, then you see if I post any screenshots, I only have contract to 1, 2 max. I don't typically size up once I'm decent on profits. I'm just trying to, and I don't lose money on these trades. I typically will have like $30 loss, and if I go on the money, I'll just move it to plus 30, so that way I'm protecting my profits. The big chunk of profits, I'm just adding 30 to it. What you guys do is that you go a size up, you go same size, let's say 5, and your profits, let's say $1,000. Well, it doesn't take much for you to lose that with that size, right? So think about the way you're playing it, and I think it would help you quite a bit if you manage that day to day a little bit better. Okay.
So I had a question about the imbalance you were just going over. When you said, like you said, you had a bone up, and then normally, like you said, when you come back down to it, you'll go long again. But on that last example, like you said, it goes up under. Now, when it comes back up to that, will you play it as resistance at that point, or you just forget it?
I would, but I would pay attention to see if the size was there, right? And the way I look at that, if you're absorbing that imbalance, what do you want to see? I first want to see aggressive sellers in that area. I want to see that somebody's there fighting them. It's almost like if you were to put a heavyweight boxer and you put in a lightweight boxer, I want to see that heavyweight knock him out and don't give him an opportunity to come back. So if that's the case, then I would look for a short opportunity from that imbalance, as long as there's volume there and there's aggression there. And if I see, let's say from the previous level moments before that, if they sold off at aggression with volume, uptick, delta, then I would trust it for a short. Right? It's almost like a SR flip in terms of levels. because you absorbed all the buyers, and if they can't reclaim that level because they're left an imbalance before, that means that they're weaker than they were. Somebody has inventory. Somebody else had a question.
Yeah, my question was on 30 minutes of to find your imbalances. What tick size do you use? Do you use one?
One.
Okay.
Shorty, we had this happen a couple times last week where they just sold off 50 points or something on the NASDAQ, like majorly, and you had a series of imbalances, like 5 in a row, and these big, massive gaps. They
I
flushed.
remember that.
And when we came back up to them, I was shorting them, but the problem is they're such a broad area. They may cover 30 points worth of red zones, multiple times. You know what I'm trying to say?
I do. And why do you think that happens? Just think about from the big wholesale inventory perspective. Does a big boy care if he sells at, let's say, 1730 or at 17,000, a large chunk of his inventory?
If he gets to the level that he wants to sell, he sells. But normally, a big boy's going to sell at a fixed level, I would assume, unless he's trying to work the system. Yeah.
Well, typically when they have a large quantity and they've been sitting, let's say they bought it at 11.
Yeah.
If they bought it at 11,000, do you think 30 points on 1,000 contracts is a big deal to them?
No. Yeah.
So for me and you, because we are intraday traders, yeah, our entries have to be a little bit more accurate, not 30 points wide, right? Unless you're planning on swinging, right? And most people don't swing futures. So yes, I agree. There's instances when a zone is pretty wide, and usually when there's a pretty wide zone and it's on top of the candle, that's usually a stop loss. That's a stop loss hunt, and
I guess I'm looking at how to play it. Is what I'm sort of more trying to.
I'm getting there. And when you have that, right, if it's on top, if that zone is built on top of the candle, I don't treat that necessarily as an imbalance to short. I like to see the imbalance is somewhere in the middle of the candle.
Yeah, we had a lot of that, like where the 30 minute was in the middle of the candle. Like they flushed, and it could have been partially news. News, you totally see it from the top.
Well, news are difficult, right? Because that's usually just algorithms picking up a word or a statement, and then they just execute.
Yeah, it was news, Bean. I know exactly what you're talking about. They were huge, and it was going when it went back up. It was going right through it.
And the way you would play it, Bean, when you look at those imbalances, can you just take and some of these imbalances, let's say it's a 30-minute imbalance and it's huge. Let's say it's 30 points. Sometimes, like you said, they come in to the inch, like perfect tap on the bottom, and they reject. Yep. Sometimes they go through it. But even if you're on 5 minutes, some of those, you see the volatility that it brings. It just spikes higher and then they sell off.
Yep.
Right? Immediately. Yeah. So how can you play it? Well, the best thing you can do is either you take the risk if it's a wide range and you see that there's going to be sellers, and you put it above it, and then the chance is that you might get stopped. Or if they go above it and then they lose it, that might be a safer entry. But what if it hits it and rejects it and you're not in?
Yeah, but it's such a wide. It's so wide, Shorty, that it's kind of hard to put.
No, I typically don't like to play when the balance, and I think I talked about it the other day. When the balance, I think on the watch list or Sunday, when it's 30 points, I don't have, I can't play 30 points top loss. Like if I'm trading regular size on Quant Tower. So what I would do, Beans, I would ignore it. I wouldn't look to play 30 points wide zones as a perfect entry. I would let them slow down and see how they behave as they come to that level. From that zone, if I can nail down a 5-point range, right, based on their price action inside of it, then I might take it then. But on initial tap on a 30-point zone, I wouldn't even play it.
Okay.
It's just too big for
Or
comfort
maybe,
for me.
look for some sort of ledges with volume profile or whatnot.
Exactly. I mean, as long as you can
Board or-
have a confluence, right? And we'll get into it here in a moment. Let me see what else we have. Setting it up, footprint guidelines. I think we. Okay, I think we can. I'll give you guys a lot of examples here. So.
Great.
Okay, this was one of them. If you guys remember, we took this trade. You guys remember this a while back? I don't know if you guys do. But this was one of the trades we took, but I'll go live. It might be easier for guys to actually correlate to me. Let me make sure. Man, Thinkorswim is still installing for me. I don't know if has anyone tried updating Thinkorswim today?
No. I mean, I did the other day, but it's not. It's fine for me.
Okay. Let me see. Let me just try one more time, guys. I don't want to reinstall it, but man, this is all I get for forever. If anyone has Thinkorswim, if you guys can just please try to update it, that'd be good. I'm gonna lower it down now.
It was lagging real bad the other day, man.
Yeah, it knocked me out twice, and I don't
Oh
know if
my
it's
God.
but I typically don't have a lot of issues with.
No.
All right, so let me go here and let's look at first. If you guys are using this, I'll cover the settings, so you guys know how to set it up, right? So if you guys go on the cluster right here, and let me see. If you guys go on the settings here, first one is the cluster, right? You want to go under here and you want to change it. You can pick imbalance. That's what I do. When you read an imbalance on any time frame, right? I'm just going to change the tick size here to 1. So now it's just going to give me a full profile on these. So
I got a question for you, Shorty, after you're done.
Yep, no problem. So now let's look. And I think this is a pretty good example being of a stacked imbalance that's at the bottom of the candle here.
Yeah.
As you're coming in, right? I mean, right in the bottom of the candle, they're buying. But
Yep.
what I have to do here when I see this is what's happening to the right, or I'm sorry, in this case, to the left, not right. So if you look here, we had a nice pump here. This is also a yearly VWAP here. We came back, we bounced nicely from it. I would think that from this candle, I could use a couple of confluences to find any of these levels here. And when I say any of these levels, I'm talking more about, let me see, is this fibs? One of them is fibs. Okay, maybe not. You could use fibs from here to find that 50%. But better yet, you could use volume profile in between, like you mentioned. Is there any shelves? And I can, clearly see from this bounce here to here, there is some overstack here at this area, right? It doesn't take too much to notate. So if I was to do, this is just showing me delta. I'll switch this to, let me see, where is it on the bottom somewhere? I'll change this to volume, and then I'll look for the nodes and see what happens, right? So if this is a node here, and we know how to play P-shapes, right? If you listen to the volume profile, or if you read the PowerPoint, what's the rule on P-shapes?
If you break below the
Yeah, the
POC,
node.
you visit the higher volume node.
Yep, and the higher volume node in this case would be, do you agree, or is there another one?
Yeah.
This one, or if they come here, that's already too low, right? You're already
Yeah.
lost.
Yeah, I was looking at the one at the bottom initially, but yeah, that other node's higher.
And you would have lost the trend, and this node is higher. So they came to that node, and in this case, that would have been good. They bounced from here, and then look, they made higher highs, right? They cleared this top here. They're still stuck here from this sell-off point. But now if we look at it, right? So that's one confirmation that we could have used. So now if we look here, like the bounce that they did, as they're selling here, right? They had some aggression on selling here, and you see it, right? All the highlighted numbers, let me just delete this. All the highlighted numbers at the bid indicates what?
Imbalance.
Long or short?
Short.
So somebody's selling, and how can you tell if it was short or long?
H side or ask side.
Yeah, but the price action below, does it hold the level? What if there's an absorption happening? If we come to a level like this, right, we see that this number, I don't know if you guys can tell, there's a orange number on the bottom here.
Mhm.
You see it. That means that there was people were buying here. But if you
Yeah.
look, for instance, now this cluster here, this right here,
Mm-hmm.
if you look at this cluster here, which side's more inflated, the left or the right?
The left.
The left.
Okay, so what would that indicate to you guys based on what we just covered in the class? If that left side is inflated and you're coming to support,
Passive
Absorption.
buyers.
who is it?
Passive buyers.
So the context would tell you that this is passive buyers. So if I go, right, and I'm just going to zoom out a little bit again, wasn't that the area where we said that there was a hot HVN earlier from that P shape that we had here? Most likely, yes, right? So now if you're seeing this, that there's passive buyers here, as we're coming down here, right? And I would say that this looks like a liquidation, a lowercase b profile. And the delta, of course, picks up here, right? You see the delta is what, negative 1400. But then immediately the volume picks up again. Not volume. The delta goes from negative 14 to negative 200. And you see them buying here. And then comes in 830. Seems like news, right? I would say these are news driven. And you see, I mean, double the volume and the delta. All of this seller here, what happens to him?
He's gone.
He's
He
gone.
gets absorbed.
This was the point where he accumulated, right? So if this is the level where he accumulated, they absorbed him, right? And this is where the buyer accumulated in this zone here. So now look what happens. Let me give you an idea how I typically play this. If this is the area where we absorbed, I'm sorry, where he accumulated in this position right here, let's see where did he come in when he went lower. Look where he came in here.
Yep.
He came back and hit that. And typically, I tell you guys, even when I trade live, I'm expecting them. Even Friday, I said they're going to go above and then we're going to short.
Yeah.
And typically, they do that. Now, how do I determine that they might go above? Is using today's data to see if there's a level that they need to stop people, right? If there's a lot of liquidity, a lot of delta simply right above, why wouldn't they do that?
Yeah.
Why wouldn't
Yeah.
they take more people out and then continue higher, right?
Yeah. 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 That happens a lot too.
Oh, I mean, the game is zero-sum game. So their goal is to mess you up. So now if you go in 30 minutes and you try to look at this candle here, right? On the bottom, you see something that's interesting. As you're coming, this is selling off, right? You see that we are selling off. They had a completed auction here. They're selling off. And now you're coming to this imbalance accumulation. So if you're to go volume profile, which we typically do from here, let's say I could go to this point. I'll switch this to volume.
There's a high volume node.
This is now volume. And look where we bounce.
Right at the PLC.
So what Bean mentioned is pretty much right on point. I can use volume in accordance with this footprint and look what it's telling me. I just grabbed the consolidation piece of the 30-minute candles, guys. I didn't do anything. I can change this here. Here's your candles.
Shorty, could you show us how to do that? Because I don't know how to do that on my screen. Maybe I don't have the ability. I don't know.
Just enable.
You can do this example, and it goes back and forth.
No, I mean, I see that the imbalance portion.
Oh, we'll get there.
It's where you grab the section and you do a fixed volume profile.
Oh, it's this little drawing here.
Custom
profile. There's a little box right here. You see this with 4 squares?
Yeah.
And you would just highlight that and you change it. On the bottom of the box, you have the ability to change what you want to see. Average size. I typically only use volume or delta. I'm sure there's other cases you could use it. I just don't.
All right.
And I think to let's see, drawings library. If you click drawings library, this little pen.
Yeah.
And then you would find on the bottom somewhere, you see this custom profile?
Yep.
That's, you can favorite, right? And then show it. I don't know what this week POC line is. That's pretty cool. Let's see what it is. Oh, wow. It tells you the POC lines.
Oh, wow. Nice.
Use this. Man, this is what I've been searching for on TradingView for how long? Okay, well, we just found something pretty useful. I'll have to test it. But this
Wow,
is,
what is that again? Where the PLCs were?
yeah, it tells you every POC and their volume at that level.
I'll be damned.
Oh man, this is pretty cool. I'm very excited now. Okay. Anyways, that's pretty dope. I didn't know they had that.
I can't believe you found that.
Yeah, that's pretty cool. So
Never
you will
saw
click
that.
on a pen and then go down, and then it has some cool features here. POC line.
How do you do to enable? How do you? What do you do to enable it on the chart?
You will have to click. So that's what I did earlier. I clicked here and it just started.
Oh, okay. So when you click, it just goes off on by itself, huh?
Yeah, I just have to know and test it, right? Is Monday POC 801, 802?
Right.
I don't know. I'll have to validate it. I trust it, but I learned in my life that you trust everything, but you verify it. Okay. All right, well, let me kind of zoom in. So let's say we wanted to play that imbalance on 30 minutes. I would say the balance being, it's pretty wide, right? I would say that one that we had there was, where did it go? It was somewhere here.
Right there. To the left.
Yeah, it was here. Was it here? Why did it go away? Let's see. Let's check here. Okay, well, let me check settings for stacked imbalances. So if you guys do use Quantile or any other, I think I could show you guys on Ninja on the next class. So if you look at imbalance ratios, this is where you set the imbalance. What do you want it to be? First one, I want 300%. I use, on the buy side, you could make them more like greenish like this. Let's say like lighter green and then something like this, where all the green imbalances are going to be, 300% is dark. This one is this, and then you can make this one something, I don't know, something hyper. I don't know the hex codes here pretty well to know, but you could highlight them differently, right? To differentiate the level of buying. This is 600%, and the green one would be like, hey, if you see this, that's pretty good because that's 9-1. And look, where's the 9-1? 9-1 happens to be here on the bottom, and that was our imbalance. So I'm just going to highlight this for a second so you guys can see it, so I don't lose when I go on smaller time frames, that I don't lose the reference point. Okay, so let's go in 5 minutes, and then let's find that little box that we were in. Where is it?
You passed that, I think. It's on the right. Yeah. It's like a very small. Yeah. Go over. Right. I think it's right there.
Right after the V should be.
Well, let's just go in 30 minutes and look at the date. 1/2, 1/12. I'm sorry.
Yeah, there you go.
Yeah, right here. So this is the box that we're interested in, and I'm now on smaller time frames. I'll just look at it in 5 minutes. Typically, that's what I kind of switch to. And here goes. All right. Remember how I said earlier, I said I want to see whether the bid's a little bit inflated if you're coming up to support level. And then at some point, I want to see aggression coming out of it, meaning
Are you talking, Shorty?
Yeah, I was looking at GR and see maybe I'm getting transferred to Schwab, so it's not updating for some reason. Okay. Anyway, so now you see that there's a little bit of bid side being, looked at here. So if you look here, you see 1,000 contracts, and I can also switch this cluster to be basically a 2. I can change it to, let me change it here, from imbalance to a double, and I can have I can have, let's see, double here, and I can have, they have typically buy and sell volume here. I can change this to be just sell volume. But let's say in this case, I'm able to see, the buy and the sell. So here you see at the bid level, they're coming in and they're hitting a pretty, now you're reading horizontally, not vertically. Now you see 1,016, 696. You see a larger volume concentrated a little bit on the left side. POC here shifted, but the most important piece here, you're seeing that there's a completed auction right at the bottom, right?
Yeah.
Following so far? So you're completing an auction right at the imbalance level that we had. So if I was to go back, switch this to imbalance, there's the imbalance level you're completing. And then right out of there, you see the aggression coming here. There's a little bit of aggression coming out. So typically the way I play this, if the POC comes out on the bottom like this, and you have aggressive buyers that are sitting somewhere on that candle itself, right? I typically would like to see this level here taken out. Because if these bid buyers that were sitting there resting buy orders can absorb this, aggressive sellers, what we drew about absorption earlier, right? That would be good, right? That would be ideal for us to see that. And now if you look on 5 minutes, let's see how it's checking. So 26,000 contracts, a -2. So they're picking up here and the volume is also picking up. And they're literally stopped in the tracks here immediately on the candles following that. Is this the best absorption when you think about from terms of volume? Is it? What could have changed to make this uneasy go long on this candle?
Easier, you mean?
Yeah. Well, what would be
more volume? Like volume
more.
suppress the 25 showing.
Yeah, we want this volume to be higher than this one because we want these buyers to be, more aggressive, more people interested at these levels, but that's not what happened, right? But either way, this is ideally how I would play it. I would look at this zone here, especially where the large bid was. If we can crack this and think about points, right? So if you got in, let's say at the high end at 804, your stop loss is at 802.25. So you're giving them what, 2.5 points? I would take that trade. And if you're getting 8 to 5 points, then look, you could target, maybe somewhere you can find a level here, right? So let's say if you want this, well, if you're targeting 12, let's say you want to get out at 12, that's not a bad level to get out. So let's say this was your level to target, 1275. You get in here, so that's 6 to 1 trade. Most people would take that and be happy.
For sure.
Yeah, that's big.
But then look what happens shortly after. They come in at 1135. What did they do again? They came in and look at the aggressive selling that came in. You have an aggressive sellers showing up. This is an aggressive selling imbalance at the top, not at the top of the candle. I like these imbalances a lot more than when they're at the top and the bottom of the candles. Usually the top and the bottom are triggering stop loss hunts. Right?
Yeah.
If they go below here, right, like we had them here, they could have triggered it. There was a lot of shorts here. Just think about it. Look at this price action here. Everybody was short on the market. This is overnight inventory. Look, aggressive, completed action, aggressive. You see aggression on selling, bid, aggressive, and look at this. How do you kill the people that are net short overnight? You just go long. And they squeeze them out, and these people start covering, and then they drive the price higher. But that's why I don't like to see the imbalances on the bottom.
This was news, right? This 530 candle?
This, I would say
830.
Yeah, it has to be some PPI. I don't know what it
Usually is.
Yeah, okay, so that was PPI. And the other one
that
you
was
have been selling off?
That was Friday, yeah. And then in the afternoon, let's say we went higher, right? You see the 930 comes in.
This came
in, and this is really educational right now. If you guys pay attention, this is
955 was a sell-off candle.
Look at the beauty of this. Okay, I'll go slowly here, and this repeats a lot. You have a P shape coming out here at 925 right before open. You have a pop, double volume, delta's going great. Then immediately the second candle at 930, you have a what?
Negative delta.
you have negative delta with quite a bit of volume, right? Right at open, you have 50,000 contract lot being exchanged, right? And that you have a failed auction at the top, completed on the bottom, and they agree, let's go higher. Then they have completed auction with a lot of aggression at the top, indicated right here with the delta, with the highlight on the left side. Negative, negative, negative. Then they have a failed auction at the top. What would you want to see here, right, from the footprints perspective, here to short?
Inflated ask.
Delta.
So you want to see it to go. Well, you
Well,
want to
you-
see it go below that cluster of POCs, right?
Okay, yes. You have something here at endpoint. What is this, Cuban? Do you see the ask?
Yes.
Is it big?
You want to see a bigger number, yeah.
And it's much larger. So let me go on double and let me
Yeah.
give you. Let me zoom in a little bit so you guys can see these numbers. Look at the ask versus the bid here horizontally.
Yeah.
So somebody's like, okay, sure, you can have it, right? Now, when you look at this, right, you have a P shape here, and on this side, there was a bid here. So somebody's trying to hold the market at this level. Once they lost this level, right, seems like there was no coming back to it. But I'm just now on a double, which is the selling volume. If I go back to my imbalance, which gives me the aggressions, look at the point when they're approaching the completed auctions and these sellers right here. There's a lot of aggressive sellers, buyers initially here. Look what it's being met with, right? So you have these buyers. If you're able to absorb these aggressive buyers, remember how somebody asked, I think was it KJ or who was it? Joyce, was it you? You asked earlier, how would you play the imbalance that was previously, let's say, bullish, but now it's becoming aggressive? How would you know? Isn't this the pure example of it? Where you had aggressive buyers, two stacked imbalance. If I was to change this guy, let's, for purposes, change this to two stacked imbalances, now it's going to highlight this one right here somewhere, right? So if you look here, there's the highlighting of that one. But look what they brought in as we're going down.
Yeah.
They came in and they said, no, we have a little bit of more inventory to sell. So if you're able to sell this, look what they did on the next candle. They came back and then they literally said, no, we got a little bit more, right? So you see aggression showing up again below the completed auction, and then boom, they just continued. And then you see, where do they go to? Well, you had this auction here, and you see this imbalance happened at 9:20 a.m. Is this the imbalance that has a lot of contracts right before open? I don't necessarily see that as size. I would say this is 4 times the size of this imbalance, 65 versus 476. And you see that's fairly large, right? Let me make sure I change it because I'll forget and I'll stay on 2 imbalance. Okay, following so far. And then you see here, there's a large stacked imbalance on the short side, but the delta here, what's happening here with the delta on this candle?
Buyer absorption.
Yep. Seller absorption. It looks like
this is a seller absorption. You have a little bit of a trap.
Oh,
There's
yeah,
a completed auction. You're coming to an end, and then they get a nice bounce, right? They came back to the POC of the highest delta, highest candle. Look at the POC here. And sometimes I highlight when you have a big delta or directional move, find the POC of that candle, and I would say just draw a little bit, zone around it. In this case here, I would typically draw the same up, lower, higher, same distribution around, and then look. They came back to it. They didn't like it. They had a failed auction, so I wouldn't be shocked if they come back and they try to clean this up. Let's see if they did. They did not even get there. So let's say on, what's today, Sunday? Tonight, if they're able to auction above this, I would expect them. If they're able to clean this up, they can go to 30 here. So 25, 30, and at 30, just because there was a lot of what? What happened here? This is shown the right side here on the right profile. I customized it to delta. Currently, there's a lot of buyers.
Sorry.
If there's a lot of buyers at that level and then we are below that price, what happened to those buyers?
They're trapped.
Most of them are trapped on the long side. So if they're able to reclaim this level and come here, that would be a good fight, right? And if they reclaim that level, I would say they're most likely going to clean up those. There's one more poor high left somewhere at 40 level, I believe, 41.5. Most likely they would target that. But this seems to be a pretty good seller here on this candle here. And you see how's the volume concentrated for this guy here. You can just tell by looking at the candle here, right? If I go on double, or let's go single, so you guys can see it really. Look where the POC is on that candle. POC is the yellow one. Highest amount of contracts is selling off here. So if they're able to reclaim this level here, I would say most likely they're going to find the supply here to be tested. And if you think about it, right, if you just think about price action, this candle here was the result of what? Result of this accumulation that we had here. Right. So if they're selling off from this candle, and let's say they absorb this, where do you think they might go next?
Up to the bottom of that candle.
So they're most likely going to look to find somewhere around here to see if they can find, you know, to this level. They would target 35. So if you reclaim this, higher chances you get stalled at 30. Next target would be 35, and that's how I would play it, right? And this is me shifting. I'm on volume now. I'm not necessarily on imbalances, right? Okay. So now you look again. Right here, this is what Bean was talking about earlier. We have a nice imbalance here, which is a valid imbalance, right? They accumulated, right? And you see them selling off. And the volume picks up, and then look what happens. They come here, they give you a nice stop. I mean, they gave you decent points. You're going from 15, and they gave you an opportunity all the way to what, 9-ish, 10? And then they absorbed it.
But Shorty, if you look at this, go to that one long candle with all the red delta.
This one?
See, you get, look at all those little things that need to be cleaned up. I mean, to me, that's what I mean, why there's like a whole bunch of it. At what point are you looking at shorting? Obviously, the first time it hit that next candle, you could short at that first red zone. Down just the smidge. Yeah, you see the next candle, that's the highest it went, was the red zone there. Yep. And then as soon as it cleaned up, it went to the next zone. And it's like edged its way up. So in this kind of situation, could you just sort of go for the short until it failed?
You might blow your accounts doing that. Because, you know...
I mean, if you did a stop loss, if you did put a stop loss, you know...
You can. No, you definitely can. But think about in terms of volume. Does this candle have the most volume? Where did the accumulation happen?
Up top.
So for me, as you know, I care about accumulation setup more than anything. For me, that's the bread and butter of my trading. We have this zone that accumulated. This is the result of this. You blew up the balloon here, and this is the result. So now if let's say I draw this here, and I'm just going to change this to volume. If you can come back to this POC, I might take this short, and I'm aware of this imbalance here. And if they absorb this, then this short's not going to work.
Yeah.
And that would be a fair, at least for me, that would be fair, right? If I was to draw this, let's say in this area, and if you're able to crack through this zone here, then that's the level that I'm, let's say this right here. And, it worked, but I don't think that would be enough. 2 points, I don't know if I would be happy with 2 points, risking 2 points. So here I would have taken short on this POC here. Once they pump it, and maybe, the zone gives you decent points, but probably not enough. Once they reclaim it, you got to get stopped, right? Because that means that they're finding buyers, they're more aggressive. And when you think about footprints, was there any indication that they're going to crack this? Well, let's look. As they're coming up here, the volume, I mean, during lunch, this is, I guess, good, 7,500. They're pushing, and there are some aggressive buyers coming in. They have a completed auction. They sold off from that imbalance. But then they worked on it. You see how the candles got a little tighter around it. They're concentrating on that inventory, and they're literally absorbing inventory, and they cracked. And look what they did.
Right at the finished auction. The finished auction, they cracked.
Yep,
On the
they
bottom
cracked
there?
it here.
And the top,
Which one?
actually.
Both sides.
Actually, the prior candle, that yellow beam, you've got both, yeah, finished on both top and bottom.
Yep.
But you broke that red zone.
And I mean, during 11:30, you're gonna get this volume between 6 to 8 on 5 minutes, right? And they're staying together. But then look here, what I mentioned earlier. Let's say they crack the zone, which we said is now more on the bullish side, right? Look at the HVNs here. Remember, I said if you have POCs that are stacked together and you go higher from that level, pay attention to it. Look what they did here. They accumulated a lot here. They have a failed auction here. So auction wise, they should be revisiting here. And look what they did. They found a lot of buyers here, aggressive, 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 and they pushed higher. So now if they were to come back to this level, let's say this level right here, it might be a good buy zone, right? And I don't know, I wouldn't call this a retest if they're to come back here for a scalp. And when I say, I'm not giving you this for Monday because I wouldn't trust, 5-minute candles to go long on Monday. But if this was during the day and we were trending higher, making higher highs, this is the level I would look to go buy.
Yeah.
And then I would look at this, I would switch that to that day, right? Well, let's say yesterday. And I would look to see how's the delta pointing here. And that's typically how I change it. Or I could just simply do what I normally do is I would look at this and be like, okay, well, where's the delta at this point? So there was not really a lot of buying at this level here. I don't see it. There's a lot of buying at the top here. So if there's a lot of buying at the top and the price action is not going above, what does that mean?
Absorbing.
Buy absorption.
Yeah, that means there's a lot of absorption and most likely you're gonna go back down. So if you guys look, I also, sometimes when you guys see me, I turn this on, which is a step profile, basically like ladder. And if I go here on, let's say 30 minutes, and I turn this on in 30 minutes here, it's just gonna give me for each candle, what is the footprint, right? And you guys can customize this. So for instance, let's say on this candle here, as they came back lower here, what happened to these guys? A lot of people started selling here, right? And then the price went up and look what happened to these boys. Then they had to cover, right? And you came to the top here, you don't see a lot of necessarily, I would say, buying. There's some buying at 219, price went lower, and then of course it continued higher. There's a lot of selling here, right? When we are not able to establish price lower, they continued. Now let's look at the top here. What happened at close? How many people started buying here? 234 lot, 529, 279, all pretty aggressive, right? And if you look at this in terms of volume, they're buying right on the POC where this one is matching, right? Now I add the delta to confirm where the aggression and where is the people more aggressive. So you're telling me you're buying the most at the top here, but you're not able to break the top. So if you're able to crack below this POC, which is in this case 18.5, where would you expect them to go to?
If that's saying it's buying, isn't that passive sellers?
It could be. How do I know? There's two options.
Well, I would say because you're at the high, you're above it, you have a finished auction, and it's like it's a finished auction near the top, and you've got a large amount on the side. It looks like passive selling.
It could be, yeah, and that's why you have two options. Remember, it has to be in context with the previous what happened. If that's true, right, and it could make sense, right? Because if this is the candles where you sold off from, and you look at this, there are some sellers sitting here. See, the delta is not really huge. There was not a lot of aggression and selling in this area. So the buyers are probably trying to step in to drive, most likely to this point here, because that's where the liquidity of the sellers are. The sellers' liquidity is all the way at 30. So when you guys hear me, they're targeting most likely, I'm looking for high volume nodes of delta where they sold off from before. Is there a chance that they're targeting this level here, right? 413, yeah, but that's not big. When I total these contracts up here, and if I was to just, increase the cluster size a little bit, let's say 5 and 5 should combine that level up top. Now you see look at the cluster at the top here. So I'm pretty certain that this guy here got trapped, right? And then they sold off from that level, and it got followed with what? With a lot of selling here. Now they have a lot of buying that happens here. So now if the buyers win this, where did they go? They're targeting probably the next liquidity, which is sitting at 30 to 35. The starts right here. And most likely they would try to, get more buyers to buy here again. But if they clean that level, then it's, I would say it's a different story and it changes a little bit. But in this point being, I would say that it seemed like at that time on 5 minutes, it looked like there was a little bit of a trapped buyer sitting here. Right, and trapped buyers on 5 minutes, in terms of bigger scope, day to day, doesn't mean much. Right, just because
that's what I was going to ask you. When you change the customs, the tick, what? Then you put it up to 5. Why do you do that?
Just so that it consolidates the tick size. Tick is 50 cents on. I'm sorry, 25 cents on ES.
You mean consolidate the candle?
So I want to see a consolidated level. Instead of seeing 20 and a half and 20, I'm trying to see $1, and I want that all of that volume.
Oh, I got you.
On that level.
Bigger scale, yeah.
Yeah.
Okay.
So right now, if you guys look, 899 contracts at this level traded here, right? And the delta is fairly green at this point. If you're not able to crack that, let's say tomorrow, I'm just going to go back to candles. If they're not able to crack this, that means all the people that bought at that level, right? It could be that they're absorbed a little bit and they're going to be, trapped on the long side. But if they reclaim it, then they're just going to accelerate because there's not much here.
Yeah, to the next liquidity. And if not, then they're going to go down to the next liquidity at the bottom, right?
Exactly. Yeah.
Which would be, what would you think that right there at 979 or 90 or 997? Or probably visit 979 going down.
Where do you see 979? Sorry.
Going down. I'm talking about on the right side.
Oh, this level. Usually I look for these levels in between the stick out. So there's a big one here, right? This would be 1800.
Right. That's what I meant.
That's a big level. And then if they lose that one, you can see.
And go to the next one.
Zoom out, you see a lot of shorts right here.
Mm-hmm.
If there's a lot of shorts here, look how many people shorted here, and look what happened to the price.
Yeah.
It went higher, right? So sometimes when you see these levels, especially on the bottom, like when you see on higher time frames, let's go on like daily.
So if I'm going down, I'm seeing that level, and I'm seeing a lot of traps. When I get to that level, I want to get out or get out before that level.
Let's see. So now if you look at this is a daily candle, right? And we'll just assess what happened at the top. So now, what do you think happened at the top here? This is our candle right here, and I'll show you where we are in terms of candle itself. What happened at the top?
It was a trap, right?
Absorption.
Let's zoom in. So there's a lot of aggressive buyers that came in at the top. Who typically buys breakouts?
Short-term trade.
Short-term retail people that come in and they bought it, right? And look at the buying that happened at the top. I mean, you want to add these up real quick, or you could just, what I do typically is if I want to see a consolidated level, I will increase this. And now, so you have 4,600 contracts at the top.
Wow.
And to me, it's, in this case, it's positive delta, but that doesn't mean that it wasn't a seller, right? That was a passive seller sitting at the top. But either way, if somebody started buying here and the price went below, these guys, whoever bought, and I know for sure on the candle prior to that there was a completed auction as well.
We got smoked.
So these people, for instance, let's see this guy right here. This fella right here, let me change this, enabled. So he bought 108 here and the price went down. I for sure know that this was a buyer that came in and he's just holding. it got sold off. And then you see that there's aggressive selling. Remember earlier in the class in the PowerPoint, I said you see a completed auction, they trapped them, then you want to see them get away from that price quickly. And you want to see aggression. And that's exactly what this is showing. He sold off. Somebody tried to buy back in. Maybe the same guy was like, I bought 108, I'll average, and then boom.
So that's a confluence that you're going the opposite direction.
Most likely, because it's telling you this auction is completed here.
Yeah.
And now you see here, they trapped the buyers, but we never even tested that completed auction from before.
Yeah, didn't even get up there.
Trapped them lower, and now, you're going, and now look, the HVN of this buying zone, if you're not able to hold this HVN, then I really don't even know where we are. Keep a mental note during Sunday. If you're below this level, that's a big level because you were not able to hold it last time, right? And you see it. Now you look at the HVNs, if you just kind of look at the shades of the color, you see where it's at, right? If you're able not to hold, if you can't hold this level here, the HVN of 2 days, there's a high chance that you might go a little bit lower, and you would look for somewhere, just look at these levels. There's a high print here and a lot of volume concentrated in this area, 47.88. You lose this 47.88, well, I mean, you don't have a lot. The next one would be around 62, just off of these candles, right? Because you're looking, where's the concentration of volume? Where did it happen? And this is the biggest candle. I think this was this Monday, 1/7?
Yeah, 47.88 was a level on Friday, for sure.
Yep. And you pop, and this zone here is, I would say, pretty big. And this is imbalance. I could go switch to single, and I could change this to just volume, and now I'm able to see where's the highest volume on this candle here. Let's see, I'm gonna disable step because I don't care for it too much. So on this here, look at the volume node here.
Oh,
that we were coming up at 58-ish. That's pretty big one, and they have no interest on selling below 50. Unless we get new initiative sellers, because this is the value area, if you guys think about it. This line and this line is the value area of this day. If we are able to get new initiative sellers below this level, that would change things. Because that would mean that they're initiating that they want to send a lower. Until then, this is the line in the sand for a longer term picture, the 50 level. They clear that, and they have the opportunity to sell much higher.
Is that a VWAP you got there? A couple of VWAP?
Yeah.
Okay.
Yeah. So I have a daily, and then I have a 1 month VWAP, and sometimes, as you see here, I have a 12 months VWAP, which is our yearly. So it's a trailing 12 months VWAP here. And you see we got expanded here, and now we hit almost second standard deviation here and failed. So now typically what happens, it wants to pull back to the VWAP, and they did, right? They came in, I'd say right close to it, 2 points away from it, right? And there's the node sitting at this VWAP. So would this be potentially a level where you get buyers?
Absolutely.
I would say yes. There most
Especially
likely be some
being
buyers
VWAP.
sitting there. Okay. On smaller time frames, when you guys are, let's say you're just scalping entries using footprints. My favorite is still, and I would say always will be, is looking for these HVNs that are stacked, especially if you have each candle, as you guys see here. I'm just gonna change this a little bit.
Yeah, with POCs next to each other.
When they're stacked like this, guys, it becomes a really, really good way to play it, and it happens a lot. And you see here, I mean, this is just consolidation. When you take these candles out, this is just consolidating, but I'm able to see exactly where is the POC of that candle. So let's say I wanted to play this zone if it gave me a retest, right? We dumped, we accumulated for whatever reason we found earlier, we bounced from here. Well, let's say I wanted to play this as an upside level. I could take this level right here, right? And I can, whatever you guys do, I typically like to increase it, but let's say you're like, oh, I want to keep it lower. You keep the tick to 1 here. Look where we bounced. So you pop from here, you let them go. Can you guys hear me?
Yeah, right on the money.
Man, somebody's mic was just the whole time, man. I didn't know if my mic went dead. Look at the retest they gave you. They created an imbalance. They broke the, the highs of these previous consolidation candle. Look at the retest. Right off of what? Look at the POC that's being set there on the delta.
Yeah, right off the
Right
POC.
to it. And, it's not a bad idea to take this long. And how would I play this in terms of stop loss? Well, I see that there's a lot of sellers here. So why not put my stop loss right below this candle right here, below that
Under the
delta? And if this is
ATM.
my long, I'm giving them, let's say on this trade scalp, right? When I'm scalping, I'm not looking for 30 points, guys. When I'm playing more points and you guys, I'll leave a note. I'm short NQ. I'm giving them 60 points and I'm targeting 220 points. That's sometimes when you're sure of a setup. Here, let's say I'm scalping this. I'm taking it 805. I could target simply the high of the day here or this candle here at 818. So if that's my, long, I could take that as a runner. In between, I could target this right here, right? Can I not? So that's 12 and I'm at 6. That would be good. That would be 3-to-1 trade between here and here. Everything above for me would be a bonus.
Don't you think the first bar coming out from the right would be the first target?
Which one? Sorry, this one here or?
No, on the right side.
Oh, you're using the delta. Yes, you could
Yeah.
definitely use this, but I don't know. At that time, I didn't use it because I don't know at that time, was this delta here or not? Or was it?
Okay.
If I'm looking at it right now, so this was yesterday's. If I look at, let's say, current month. Let's do previous month. If I was to do this, I'm just going to change this to green.
Yeah, that changes things.
If I was to look at this, now I know that this level here for the current month, look at this.
Yeah.
Okay, that would make sense now because I changed it. The scale has changed. Where are the big sellers sitting? Well, all of these, I would say I don't see any big sellers for this month. There's bits and pieces at 18. There's a little bit of 21, but I don't see anything that's like, my God, sticking out unless I change this to now all I can see. Kind of like a buffet here. If I go here and I look, I'm like, okay, well, let me see these levels. And now I'm able to see where are the biggest levels of, you see this 805 is huge for terms of buyers. So if they're able to crack that below, then I'm looking at the next level where it's 785.
Yeah.
And that has 9,000 contracts, right? That's how I would use this. So this here becomes between this one and this one here becomes a pretty good range. And you see that they can bounce here, they lose that, they probably go to this one. When I look at these deltas on the right, I'm particularly looking for the ones that stick out and I create zones in between them. So this would be one, this would be another one, and then this would be, another one here. I'm looking for a relative same size in between.
Yeah. And you might get a little reaction at the ones in between.
Yeah, of course. But ultimately, you're targeting that. And typically on a day profile, when I start trading and I'm scalping, I'll switch to day. Well, today won't have anything. I'll switch to, let's say, a high profile here, and you see here, somebody bought a lot here and they got trapped and then they started selling. Then they started buying again here and they sold off again. So from delta perspective, right now, if they lose this, they might sell off a little bit and then it might go all the way to 81.
So when you're doing the day, Shorty, you switch to the day so you can see what's happening.
When I'm scalping, right?
Okay.
So I usually have a full chart one and a day one, right?
Okay.
So if I do right on a full day, you also have the ability to put the left profile here. You have, you can change this to previous month or something on the left side.
Yeah.
So I usually have I would say correlation. If I'm day here, I don't want two of the same ones.
Okay, yeah. So one full and the other one today.
That's correct.
Okay.
And on the cluster, so we covered the imbalances. Any questions on imbalances? So typically,
quick question. So on a cluster, you have imbalance and then you also have double. What's the difference between those two?
So on the cluster, when you have an imbalance, you have to read it diagonally. You're reading the price action between the two levels so you can know where the aggression is. When it's a double, you're just looking horizontally at that level. What was the volume or whatever that case you might be? If you're doing, let's say, double here, and you want to look at, let's say delta, and you want to look at this one also at delta here. Now I'm just looking at delta. It should be the same on both sides in this case, right? If you do single, it's just giving you delta in here at the horizontal level. When you do an imbalance, it's reading who basically gave up the cushion. Remember, if I'm a passive seller sitting at 100, did I accept the price lower? And the imbalance tells you if you did, you went from here to here, and it's going to highlight that as a selling a bid.
Okay, because based on your previous setting, the double, if you set one as a buy volume and the right as buy volume and left as sell volume, they look the same to me. Like just changing from double to imbalance, the number doesn't change. What really changes is just the highlights, right?
The highlights is what changes. So here, where's the highlights right now? I don't have any.
Yeah, it won't have any, right? Yeah.
So I'm just seeing the volume at the top and the bottom, at the bid and the ask, right? That's what this is doing. But when you change it to cluster, it'll give me that a little bit of insight, right? Where are you selling? Are you aggressive at any of these points? Are you selling? You see here.
Yeah, you will have those machine calculated 1 to 3,
exactly.
1 to 6. Yeah,
exactly. Whatever we decided on these, right? And if you change these to something else, it might be a little hard. If you change, some people, depends how risk averse you are. If you change this to 10, let's say 15, you might not see much highlighted, right? And here's some. You see here, that's a 184 to 1600. It's a
big imbalance.
It's a pretty steep imbalance. I mean, that's 1500%. And let's say you want to trade that. Let's say you only highlight, let's say you don't want these, you want, this one here. Well, think about it. You're not going to be getting a lot, but the ones you do get might mean more.
Yeah, they're going to be,
You see what I'm saying? Like, right? Because they're not going to happen as often. And you see here, you're not really getting much at all. You get some here, and then you sold off right from it. So it depends on, typically the standard is 369. Right, but that doesn't mean, necessarily you have to do the same thing. You'll have to define what works for you. For me, it's 369 standard, and I
just have to be more patient if you're gonna go.
Oh yeah,
15. Yeah.
Another feature I can't figure it out. I wish I could is the filtering. Right, if I can filter the volume, NinjaTrader has a really, really good feature where I can filter where the contract size of purchases is higher. And basically, what you would see is
Trader Dale explains it in one of his videos, but we don't have it here.
Supposedly, my friend Zelensky said there's a way, but I haven't been able to figure it out yet, is where you can filter the volume, and all the other ones would show 0, but only the contract, the actual orders of magnitude that you pick, filtering-wise, you could set to be like, I don't even know where they do it. Let me see. They used to have it somewhere here. I guess I did change this. Sorry. I changed settings during classes and I forget to change them later. So let's see. Signals filter. No. No. So there used to be an option for filtering, but I don't even know how to get to it anymore.
Yeah, I remember seeing it in one of those drop downs. No, when you right click on your mouse.
Yeah, it's just not there, I guess.
Yeah.
Okay, so is anyone not comfortable with imbalances? Are you guys okay when you see them, what it means, how to play them?
Can you just talk about this real quick? It's not necessarily just for imbalances, but for just zones and levels in general. When you're looking for a reaction at that level, how are you determining what kind of reaction you should expect before getting in? Because especially on like NQ, it'll it'll go to a level, it'll maybe go down a few points, go up a few points, it might hover, or it might look like a rejection and then fail. So I'm just trying to see how you really just determine to get in.
So an NQ, if you're new to footprints, you should not use 5 minutes. I would say 15 minutes an NQ is plenty for you. But anything below that, you might have like a little bit of a chaotic behavior towards your levels, right? So if you guys look here, same setup that we saw in ES. I'm just gonna hide some of this stuff so you guys.
Yeah, MQs.
NQ is not, if you're new, I would say stay away from it till you get comfortable with ES a little bit, just because the price action, look at this. I mean, you have skips and a price action that's just exploding on no volume. And this is what Bean was talking about, imbalance. So it's hard to use these pre-market imbalances just because the volume is 4 to 0. You want to see not necessarily zeros on your imbalances. You want to see attempt from others to stop it, but the buyers or sellers overcome. Let me find one that's kind of like RTH. Let's see from here. So let's say from
no sellers whatsoever.
This pre-market, that just becomes a little bit harder to read because there's no volume. So let's say for this one here, we sold off on selling and we're going down and I'm on 15 minutes and then we come back to that POC and you see the delta is going, I would say it's going major green. So on this level here, where it's a long liquidation, a lowercase b shape, right? It means liquidation. As you're coming here on 15 minutes, what I would typically want to see as you're coming to this POC, and if you want to see a bounce, I want to see that there's a completed auction on the bottom, right? I do not want to see any failed auction like you're seeing here if I necessarily want to go long here. Because what it means on a revisit here, what's typically what they're going to do here? Most likely they're going to want to resolve this auction that you had here to the downside.
Go lower,
so
yeah.
here, let's say if I'm anticipating long here, and I probably at some point was, can't recall. If I'm anticipating long here, and this is a bunch of chop here, I want to see on the bottom what of these candles. What do I want to see?
Completed
auction. 0 on the right side.
I want to see some completed auction, and we got it here. We had a failed one. They resolved it here. They have a failed one still here. But here, for instance, they have a completed auction. So I do pay attention to it, and I also note that they're making higher lows. And now, if I'm seeing, and I would say this day was fairly difficult because it was more of a melt up, right? So you had to buy and hold forever to make some points. But let's say from this action, you missed all of this, right? You missed this whole run up. I typically would play exactly kind of like what this is doing here. So here, the long liquidation stopped on a lowercase b, and typically you're going to come back to it. P or B shapes, if it's like this and it stops, doesn't continue down, it's reclaimed quickly, most likely you're going to come back to it. So what I would look for is when you're coming back to this level, how are you behaving? And then in addition to this, I would most likely draw something like this, just so I can see, how was the price action? What did you do when you accumulated here and how was it? So now I see this, right? And I see that there's a level here that's fairly green. So I would go back to this candle here that's coming back for a retest. Now I will look to see what happens. Do I see any aggression here at the bottom? Not really, right? I do see something that's, there is some inflated on the bid side, but not a lot.
Yeah.
So in terms of level, would I trust this just solely on the footprints here? No.
No.
Especially with an incomplete auction, right?
And a completed auction, would I trust this? Probably not on 15 minutes. And that's for NQ, I would not go any lower. Is there a chance that you might miss this bounce at 315? Yeah, so what? So I wouldn't trust this necessarily to go on a long side here because I'm not seeing them. If it was a completed auction and I saw aggression on buyers, I would say, yeah, that would be good. What does happen here as they're going here, they did create this double HVN. So if they're to come back to this level here, and I think this level hit quite a few times on Friday.
Yeah, that's more
secure. I would like for this to come back and that we have a completed auction and I see some aggression coming out of this. So that was the level right here. As they come here, I want to see some aggression coming out of that, and I will look for a long. But I would say Friday is probably the toughest day to use the footprints because it was just chop and then a melt up or a meltdown everywhere.
Yeah. So I guess to re-clarify a little bit, when I have like a zone, like the double high volume nodes, and it comes and it hits, what what are you looking for in a rejection, right? Are you looking for some accumulation below it and then it breaks back through above and then you just mark
No,
it in when you see, or you looking
on the
for like stacked
HVN
buyer imbalances?
when I see the HVN like we saw here, I would not wait on the first tap. I would not wait for any other sign than you had this accumulation and you come back here. I would probably buy it on the first tap.
Okay.
If
Yeah.
it's unvisited HVN like this one, meaning it hasn't been tapped before, I typically buy this on the first try.
Yep.
So like this one here, let's say we're auctioning lower and I see, I would pay attention, how do we get there? Is the volume picking up on selling? Is the delta picking up on selling? Or as you're coming down, there's no interest to sell. And when you come here, you're coming in, you know, in this case, let's say 330, you're coming in with high volume and a breakout here with positive delta. Well, I would go on the first tap here. A first tap on double HVN is more likely to work than not, in my opinion, especially if you're playing the
Yeah.
trend.
Yeah.
Playing the trend meaning, you know, in this case, I would say we had no trend. You had lower high here, right? Lower high, and then you have higher lows. So and lower high and higher lows is not a trend. It's necessarily a consolidation. So I could play this, but I would not expect, you know, especially when you're in a D-shaped type of day, I would not expect a whole lot of points, and I'd be more quicker to take profits on a non-trend day than in a trend day.
Yep.
That makes sense. But I would trust HVN to hold this, because if you can create a HVN and create a small imbalance on a, you know, a non-trend day, well, most likely you're going to come here and buyers are going to pile in, meaning two-sided activity. People like me and you, they would come back here and defend that for a small bounce and get out.
Especially if they have a uncompleted auction on the
Yeah.
on the candle right before it. Yeah, in which it is.
So
Yeah.
let me see if there's a.
You come up and clean that up.
So for instance, let's look at this one here, if you're following. So there is an HVN that's double, right? And I know this is 3 a.m. Unfortunately, a lot of moves happened in Burnside's trading. So if
Yeah,
you
but
look at this,
it. It's right there.
okay, you come here and they create a nice imbalance, double the volume, deltas, you know, 180 switch between. The volume is slowing down a little bit here as you're going up, as you're topping, it's slowing down. So it's kind of like a warning, and I guess it's a valid warning.
Yeah.
As you come back here, look at this. You have a completed auction, then you get a bounce. Is this bounce good enough for majority of people of 27 points? I would say for us, for me, it is.
Yeah.
People that expect 150 points off of these imbalances, it doesn't make sense because it's 15 minutes. I can't expect them to crack and reach the highs. I have to be a little bit of realistic, right? So if I look here, if I took this trade, what could I target? Well, this was a triple HVN with positive delta dying on a selling side, buying picked up. Pay attention to where the sell-off, where did the sellers come in? How would I target? If I'm buying here, I see the completed auction is happening. They're saying stop to the trend. Now I need to see if any key levels are getting absorbed. So this person that got, you know, aggressive here at selling towards the end, I could target for completion or entry to be above him. Right? As you're selling, not necessarily, if you don't want to buy the first tap, I typically would buy here on the first tap, and I could put somewhere in below here. So if you look here, where could you put stop loss if you're buying first tap? So if this is your buy level, let's say this high right here, 924.50, what could you put as your stop loss based on the candles, not necessarily points?
Previous low.
You could do previous low, which would be right below this auction. That's now 10 points. So in that case, you would need 30 points in return, at least in my book. Right? So if it's 924, then you would need 954. So you would need to drive it all the way up to here. Okay, is that realistic for me? No, it's not realistic because I see, you know, prior to the 54, I have this person here that sold off from a B shape.
Balance.
That means that it's a continuation of a long, like of sellers. So I would not be interested in setting a target at 54 when this guy here is fairly aggressive. So if that's the case, statistically, I can't have this trade be 3-1. It'd be like 2.45 if I was.
So it would be safe to say right there, set the target right there at the delta coming out at 16, is that 12 or 42? Okay, yeah, right there.
Right here would be the decent level. So if this is the level 942 from 24, what is that? 28 points or 18 points? 18 points.
That's plenty, man.
So I would have to manage the risk. I could put the risk, let's say if I went long at 24, I could put it somewhere right below this aggressive buyer 17. So in case this, I'm gaining 3 points on the stop loss. So my stop loss is 24 and I'm going here for 7. So 7, I need 21 points. So 21 points from here would be, let's say 924, 45. So you would be targeting literally this POC and hoping that you sell in the strength of the buyers.
Yeah.
At least that's how I would play this HVN here. And then I would say during the RTH, it's much easier on NQ than ETH, just because it's really, look at the candles and the volume on them, right? They're not really realistic in terms of price action.
Yeah,
just
I tend to wait for a couple of confluences of like, you know, POCs and, you know, footprint, everything kind of lining up. So I tend to have just like a limit order.
Yeah, that makes sense.
And that's, you know, it's been working out fairly well, but it sounds like when you talk about how you get into trades, it sounds like you're more waiting for reactions and getting in. And there are times where I have my limit orders and, you know, it'll miss me by just a little bit. And then it'll move, you know, up to like 80 points. And it feels bad to, you know, miss out on a huge move because my limit order was off by like a point or two.
And it happened to me. It happened to me.
Yeah.
Probably 3 times on Friday where dumpster gets filled and I'm like, Burnside gets filled and I'm like, damn it. My buy is not there, and that's okay, right? And as long as you're, you know, it doesn't drive feelings for me, honestly. It might drive a reaction out of my mouth, but in my brain, I'm not mad or sad. It's just that they missed it, and I keep going. Right?
Yeah, I guess what I mean is like, yes, I have my limit orders, but since it sounds like there are times where you'll get in once you see the momentum start, or you see like the rejection that you'd wait for, instead of just having a limit order sit there. That's I guess what I wanted to see and see if that would be something I could apply as well, in case there's a time where I miss out on my entry a little bit, but I do still think the move is going to happen on how to still enter into those trades.
So sometimes what I do, if let's say I see the price is coming, and let's say I notice on 5 minutes, if I'm on NQ or ES, I notice the buyer stepping in, right? Whether it's volume or delta, right? Shift. I would enter market sometimes, but I do not enter the same size as I had with limit.
Yeah.
Because sometimes the spread, when I hit the market, right, I might lose maybe sometimes 2-3 points.
Yep.
And 2-3 points for intraday, right, is, you do that
pretty
5
big.
times, you're 15 points down just on the spread and the slippage, right?
Yep.
Therefore, if I have to use market, I'll use it. But typically, I would look for instance, right here. I see that they sold off, you know, from this candle here, it was high. This is the POC. Let's say I wanted to short that, and I do pay attention to 30-minute POCs and imbalance candles a lot. So if this is the imbalance candle, let's say I shorted here, right? They had a failed auction here, so I'm aware of it. Let's say I shorted this. I would be stopped on this candle. But when you think about this logically, right? You have this and you have a completed auction, then you have a failed auction here. What could they target to resolve? They could definitely target to resolve this level here because it's failed.
Yep.
So if I'm gonna logically take this straight short here, and I'm putting stop loss right here, I'm just setting up for a failure.
Yeah, you want to put it above the completed auction, right?
And if this is a completed auction, I have better odds of this trade working, me putting somewhere above here.
Yeah.
But this is for me personally, I would not trade this many points for a stop
That's a
loss.
lot, yeah.
Would you wait for it to go past the POC up to where that incomplete auction was, and then set like a stop limit to buy you in if it crosses back over?
I would set a stop sell here.
A stop sell, yeah.
I would sell. So this is where they look above and fail, right? They looked above this POC. They trapped some people, right? There's some buyers that stepped in, and we could potentially check this, right? Actually, to see what happened.
Yeah, the breakout of that, yeah. Stop sell.
And you guys hear me a lot. Let them clear the level. Let them clear, and then if they fail, So for instance, you see what happened here. There was a lot of sellers here. You see on this candle, the sellers were here at this level, but look what happened. They stopped them, then they buy to cover, right? All these people bought to cover, and then
Boom.
they went lower. And that's why sometimes I do stop sells, because if I don't, I try not to be these guys, and it's hard for always to be right. But this is the setup where I would be like, okay, it's a single POC. On single POCs, if you play immediate entries, you might get stopped more often than not. If this was, for instance, let's say 2 or 3 POCs, well, think about it. Now you have 2 sets of 30-minute candles. I'm assuming that there's a POC here. The probability of those people stepping in together, if it's different sellers, is higher, right? And the chance of absorption or a trap working for them is much lower. So on a single POC, typically this is what you get.
A lot of times you gotta jump out and jump back in.
I usually do stop sells on a setup like this, where they go above, and I would look, of course, I see where the sellers were, and I see the price goes above them, then I want the price to go below where the sellers were, because they'll accelerate it. And in this case, look what they did. They came back and then they accelerated. You see all the negative delta here. People were selling here. So if people were buying from this point here, they were definitely selling here. Then they trapped them. And look, all these buyers were here. They got sold. And then look. Phew, and then, I mean, this is a pretty good example here. Now look at these HVNs. This is a pretty good setup here. Because you have 3 HVNs all within the area, right? So typically what I do, let's say you find the value area high, you draw this. And if you're on this actual, what do you call it, on delta, that's great, right? And I can use indifferently because I use also volume. So if you look at volume here, it's coming back to 940 being a long level. And this went all the way to 932. Okay, so, and the bottom of this zone that I drew here, the POC on this one, on the green candle, remember I said pay attention to the imbalanced candles that have the delta, that carry the delta. This one is 860, that one is here on a selling, right? And that volume is dying relative to the previous candle from 45 to 39. This was a push up. Now this is the POC on the absorption candle here, and they came back right to it and a failed auction again. So if I wanted to play this setup, I probably could have. I don't know if I did or not. If you grab this zone, this is the imbalance. This is balance, imbalance. You're coming back. This becomes a good entry for long. And the way it looks on the candles, if you go on, let's see, is this Friday? I don't know if I'm on the Friday, right? Yes, I am. If you look at this in just pure volume, right? If I go here, what is this? I want this right here. If you look at this from, what type of day was it on Friday?
It looked like a spaceship, but it was a D-Day, yeah.
Yeah, definitely a D-Day. And on D-Day, what do? You buy the value area
You
low,
buy
you
the
sell
bottoms,
the POC, and sell the top.
sell the tops.
And here, they gave you a little bit of more confirmation on bearish side than bullish side. As we auctioned higher, okay. As we auctioned higher, they rejected that. So in other terms, when they do that, right, when they're typical, I don't know if Thinkorswim did some shit. When they typically do that, when you have, I'm gonna delete all this, go to 5 minutes. Let's do RTH. Session breaks. So here, if you guys think about it, they went to the top, like this is the high of the day, right? This is the high of the day, and then the morning low was set at 10:15 right before IB, right? Yeah. And look how they traded. This is usually the day you do not want to trade a lot. This is what you call, almost like a neutral. You went above, you didn't like it, then you went below, you didn't like it, and then you just basically look at these candles here.
Yeah, that's nasty,
There's
man.
not a lot of confidence in this trading. If you miss these imbalanced candles here, you got chopped up in this. Yep. I mean, this is nasty, pull, and then you see all these wicks. These are stop loss hunts. So on a day like this, when you see it, man, this is just brutal to trade. Then you see as well on this one here, they opened, they reached the high of the day. And you could quickly tell what type of auction we're having. If this is the PDH and you come and you test it and then you go lower, what type of auction is it?
Test drive.
You open, you test a level, and then you reverse from that level. You break the opening candle lower, right? Let's say you're using 5. This is your opening candle. You break that. What type of auction would it be? Guys stuck?
Isn't it open test drive?
Open
test,
rejection reverse.
open rejection
Sorry.
reverse. You
Rejection
open, you
reverse.
rejected the PDH and
Good
then
on you,
reversed,
Free.
right? You open, you test, and then you reversed, and then you broke the low and you continued. Right? An open test would be you open, you test, and then what do? You continue.
Continue up, you mean?
Yep.
Oh, I
You will
see.
continue. Yeah. But this day, I would say Friday was a pretty difficult day to trade. If you missed the open.
You couldn't hold long. If you missed the first, man, you could not hold. I mean, like, if you got into anything, it was quick.
Here's your value area for Friday compared to the value area of day prior. It's telling you this is, if you guys go through your notes on market profile, when you pop higher and you pop lower and you close in between, what type of day is it?
Neutral.
Okay. Anyone else?
Yeah,
A
neutral.
normal day.
No, he's right. Neutral. But look, it literally tells you range extension on both ends. They cancel out and we proceed to auction between the extremes. You went above at open. You went below at open. Where did you close?
Inside.
Inside. That's a neutral. It's really hard to trade, guys. Most people, just because they expect more, they're stuck in a trade that they add to, and then these single candles can take you out. You go 10 contracts on NQ and you take 5 points hit. That's quite a bit of money.
Yeah, blow your account.
And then you see it go in the opposite direction, right? It's not a high probable day to trade. Just because it's a narrow IB, that means the auction does not involve a lot of participants, right? So you're looking to see how can it, are they going to expand here? And obviously something's happening here, right? When you think about market auction now and kind of putting some pieces together, we had that, I believe this was Monday, the news or whatever happened. We had the huge IB, and now you see them, they are holding that value area high of that day here, which is crucial for them. Because if they start rejecting this value, look at the bounces, boom, boom, every single one offered a bounce there. They offered a bounce.
They're looking for value, right?
Yeah, they're trying to build value higher.
Yeah.
But if they lose this area, let's say, for instance, just based on volume profile, if they lose this area, what do you expect?
Zoom.
Eventually,
We
they need to test this 47.53, right, level. This would be the value area low. They're inching up higher, but they're not certain that this is a trend that they want to go in. Because if it was a bullish and a trend was starting, when trends start, what do you see? You see higher highs, higher lows, and you see not much overlap inside the value areas. But here, I mean, you pop and then you're immediately brought back down. It doesn't show a lot of confidence in the auction right now. And this
not a lot of aggression either.
And this is the auction. This is where you are right now. Just zoom out a little bit and look. You accumulated in this area for a while, right? And then you popped higher. Now the range is much higher here, I would say, in consolidation, right? So
Yeah, and for as much as we consolidated, that really wasn't much of a breakout, right?
Yep. And look now. Now, if you look at this, we're outside of developing value area. This is the value area high. So you lose this level, here, you really open up some space all the way down to this 45.66. And they're holding for dear life here. And you can see now, if I was to play this here, I'm just kind of indirectly building a plan. like if I was to play this here, let's say this is the zone. So you lose this zone, you have this double HVN here that it's causing a lot of this type of action because they don't know which way to go. Remember, auction is about confidence. They're not showing confidence higher. They're not showing confidence lower. So for me, this is be like the warning level is here. Once you lose this level here, things have to, and they have a tendency to accelerate from here. And volume would say, yes, I agree with that because there's nothing here.
Yep.
So if you're to lose that level, I would say there's a high chance once you lose this, what is this, 45, 60? So you have about, 100 points to drop in between here.
Wow.
Level, I guess close to 200 here.
Then if we go above, let them do their research, come back, reach us, and then we go up with them.
Ideally, tomorrow, if they want to see a pullback, the bears, they need to lose this level, and that's 60 points this week, I guess. They can do it in a day, but they will need some news to drive that.
Yeah.
And this is, this is from 4,100 that you ran up, and look at the structure.
The day to play SPX.
Pretty much.
I'll be waiting for it.
And the POC stayed here. I mean, most likely we're going to hit this fairly soon here. I wouldn't be shocked if we hit this 45, 65 this week or next, whenever the OPEX comes. When is OPEX? Is it next week?
He'll probably do it overnight as you.
19th, right?
Yeah, you know how that goes.
And then typically what I do when I look at the volume profile, now if you're to look at this, I could literally look at, volume profile here and see what is actually happening at the top. I see the POC now is here, right? I see the POCs here, and if you're below this POC and you're not able to gain much traction above, most likely the volume is selling. Then you would look at the footprints, right? Let's say on 30-minute candles, or you could accumulate it to about, let's say, a day or two, figuring out from December 13th you're here. Has there been a lot of selling, or is there a lot of absorption happening at the top? And then you can make some decisions, right? You're below the POC, a lot of selling when you reach the highs. That means they're maximizing their profits at the top, and you're looking for any sign on absorption of selling, right? My stuff got, there, maybe it's back. So now if I go, let's say on weekly time frame, right? I'm gonna switch to weekly. I'm gonna turn.
You're fading out, Shorty.
Am I still fading out?
Your voice.
Is it anyone else or just?
Nope. There we go.
My mic got too far from my mouth. So now if you guys look here, look what's happening on the weekly, right? So you had, you guys see the end thing here that happened on this 1231. So all the longs got liquidated here. So this level now, and they're back to it, right? They're back to the highs of that level. So what you could do is you could look to see where's the next level. They had a completed auction here at the top. So anything above 28, favors the bulls to go to about 35, just on the weekly candles. But you see here, there's a lot of selling right now at the top happening. Right, you're going up higher, right? You went higher, but the volume is slowing down. The buying got cut in half the weekend of Christmas. Then they sold off, right? Major sell-off. Then they brought it back up. If they're able to go above this completed auction, let's say close it, we're probably going to run another 200 points shortly.
Yeah, that's major selling and major buying, man.
So right now, on the footprints, let's go on the daily, just kind of look at the data, what's happening. Anytime you came to the top here, look at this. Look at the auction. Is the auction picking up on buying? Remember, when something is not valuable, when we auctioned the $100 bill, what happened to the number of participants? As we reached the $100 value, the price decreased because there's not much interest.
Yeah.
So as we reach these all-time highs, look what's happening. Yeah. And this is a prime example of what we talked about on the slide earlier. You have volume as you're going up is going down, but the delta, even though it looks bullish, right? 2,000 green delta, you went from 25,000.
Oh wow, yeah.
2,000 on the top, something's off, right? And then you see they're following up with a lot of aggression here. And look at this point here again. 18 sell off again on this candle.
So first they absorbed the hell out of it and then sold off.
And now somebody, again, a different time frame buyer, came in here with 1.2 million buy.
Jesus.
Which is pretty good, 45,000. And look, again, it's starting the auction. A lot more volume, not as a lot of aggressive buyers. Let's see if it repeated anywhere, right? A lot more volume. What happened to buyers? You see this
Fading
pattern?
away. Yeah.
Going away. So now what we're looking for, let's say we see a day, we see some sellers picking up. If we can get a day, let's say this week, and that we lose the 4750, or in this case, let's say we lose 4800, because we could target that, I would say 4750 from here. We lose 4790, 4750 comes in really, really fast. And these people on this candle would be the ones that need to prove that they're serious about buying. And you see, just zoom out. I mean, you can do many ways to look at it. Let's do single volume. I can see where are these guys, included in the buying. So there's some at 4750. The last, the value area low of this buyers is 4750. So right now, everything's pointing. If buyers don't show up quickly here to accept newer prices higher, we're going to look to stop the buying, and we're going to look for prices to go somewhere lower. I don't know what's going on. Is my wife messing around with cleaning shit or? So that's kind of what I do on the footprints level. And the best thing that you guys can do footprints is to actually have them up while you're trading and to see what's actually happening. You having footprints up and reading these PowerPoints and never using it, it's almost like you driving a day-to-day car, and then they put you in a F1 and you're expected to win. It's not realistic. You guys have to see it day to day and let it make sense. I would think, just looking at the data here, that tomorrow might be a little gap down.
Tomorrow it's MLK, I think.
Yeah, I think we're open till 1.
I see.
Yeah. And they're creating liquidity here, right? They're creating a bunch of liquidity. So I would think they're going to potentially, if they try to push up tomorrow, you would watch above this value area high of this area that we created, which is, again, that 28 level. Which I would say this is the 5th time the 28 level confluenced itself between footprints, this volume. It's a fairly big level and delta on the 28. If they're able to auction above that, that's good, and then probably go all-time highs. And if they want to go higher, tomorrow is their day to do it, because there's not going to be a lot of traders involved. They could push. But losing this POC and staying below it, to me, is bearish. Probably could lead all the way here to 64 here, where you have the value area first SIG, and then below that would be the 50 level. Okay, any questions from me? Let me see if the Thinkorswim is still not up. I'm not sure. I can't even drag it because it's lagging. Here, it's still installing updates.
Did you receive a notification from them that they switching you to the scrub?
I have to check my email, but
because if you do, then you have to basically they give you an option. Like for mine, it does like they would say create a credential for scrub, and then within the single Thinkorswim app, you can just click switch to the scrub side, and then it will change the app to blue, basically, and then you install an update within like 5 to 10 minutes.
Mine is
it will
blue
be up and
now.
running.
If you see the bottom, like it used to be green, but now it's blue. Maybe I have to restart the PC at some point. Okay. Yeah, I want to do the stock scan for myself, but without it, I don't have honestly the ability to do that.
Let me restart it and see what happens.
I'll restart it, and if I get it to work, part of the watch list tonight will does it maybe 25 minutes go through the stocks. and find them because I really need to rebalance my portfolio a little bit.
You said you'll do that tonight?
Yeah, let me see if I get it to work. Either way, we're gonna meet tonight at 8:45 to prep for tomorrow, even though it won't be much price action, but just to kind of reiterate what we do for newer people.
Yeah. Will the going over how to use the stock scanner be recorded at all?
Yeah,
Okay.
the cloud, yes.
Yeah. Okay. Great.
Yeah, we'll record it if I get it up, but either way, I'm gonna give them a call if I can't get it up because I need the account.
Okay. Great. Thank you.
All right, guys. Well, that'll be it. If you guys have questions, shoot them to me or ask in the chat, and then we can go from there.
Before you go, Shorty,
Thank you,
the PowerPoint for this one, is it shared anywhere?
Yeah, it's under, what is it called? It's called Shorty Trading PowerPoint.
Oh, so it's the same, the version 23. Okay.
Yeah, I have another version that I'm working on for market profile, but it's a totally separate PowerPoint. I'm about 70% done on that.
Awesome. Thank you, Shorty.
All righty, guys. Have a good one.